Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, February 12th at about 1 p.m. Eastern. Well, before we go on, I think the world could use a little more love right now. So I'd like to wish each and every one of you a very happy Valentine's Day. As you know, Valentine's Day is this coming Sunday, so don't forget. U.S. consumer sentiment unexpectedly fell in early February amid growing pessimism about the economy among households with annual incomes below $75,000, and that's even as the government is poised to deliver another round of COVID-19 relief money. The University of Michigan said today that its consumer sentiment index slipped to 76.2 in the first half of this month from a final reading of 79 in January. So far today, however, the U.S. financial markets have pretty much ignored the negative data. And now let's go on to three charts that could give us some insight into the week to come. Our first chart, as it usually is a chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Well, right back here at the first of the week, the SPY made yet another new all-time closing high at $390.61. It's consolidated ever since those highs, and today when I captured this chart, the SPY was trading at $391.16. That's about 39.11 on the S&P 500 itself. Now, last week, the week before this, and the week before, we did see a slight dip, and the SPY moved down toward the end of January, down to its 50-day moving average, and it moved down to $358, but then it bounced off, and the green line is the 50-day moving average. Then it bounced off the 50-day moving average. Again, that's now coming in at 376, but it bounced off that and continued making higher highs. Price resistance, we can say, is now at 392, and of course the 20-day moving average is coming in here. It's offered support for quite some time now, quite a few months through the winter months. That's coming in now at $383, so we can look at that as potential support. We can look at the 50-day moving average, their green line coming in at 376 as potential support should the SPY feel it needs to take a rest. Also, we can look back here and October highs at 354. If we draw a line, was resistance, was support back here at the beginning of November. So that comes in at 360. That's more potential support. And of course, the 200-day moving average is coming here right now at $339.57. So quite a bit of potential support here should the SPY for any reason see that it needs to pull back, or we get a little profit taking coming in. Now, earnings will be in the spotlight again next week, so please trade wisely and maintain your risk management. Remember, the market will be closed this coming Monday for President's Day. Our next chart is a chart of the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that represents the Nasdaq 100, a major index in the market. And we know that top holdings of the QQQ are companies like Apple, Amazon, Alphabet, Google, Facebook, Microsoft, Intel, that whole group. Now, the QQQ has certainly been a leader this year. Right now, as I capture this chart, it's trading at $334.98. It made an all-time closing high on February 11th back here at $334.58. So we can say now that price resistance for the Qs has moved up to $335. Currently, the 20-day moving average, like on the SPY, was acting as support, close near-term support here, is now coming in for the Qs at $326 and change. The 50-day moving average, an important moving average, is coming in here at $316 and change. So we have those two. We also have the highs back in October, November, back here at just below 300, so we can call it 300. We have that trend line, that major trend line for that support. So lots of support here, potential support. Also the 200-day moving average coming in at about 277.50. All the support here, potential support, is in line should the Qs need it. Now, the RSI here on both of the SPY and the Qs is right up here, just glued to the ceiling, we could call it. The overbought line is 70 on the 14-day RSI, and we know that when the RSI line itself pokes up above that 70 line, then the market or the asset you're looking at is really, really overbought. And many times that will cause, it may not be the cause, but it's certainly some profit taking will come in. We can look left on this chart back to the end of August of 2020, and we can see how the RSI moved up with this move up in the market that was really steep. It moved up, and when it got over that 70 line, this horizontal line you see, then the Qs did succumb to profit taking here for at least a short period of time. So at any rate, the Qs still look good here. Everything's in an uptrend. You'll want to keep an eye on it in the coming week to see if buyers continue to take it higher during more earnings announcements, or if sellers begin to take profits and send it lower. Our final chart today is a daily chart of the iShares U.S. Oil Equipment and Services ETF, the IEZ. It does have 23 holdings. Top holdings are Schlumberger, Halliburton, Transocean Offshore, ChampionX, Helmerich & Payne. Now you can see, and you can't see on this chart, but if you were able to see on this chart, you could see that the IEZ started, the fund started, it was implemented in December 2006. And it actually made an all-time high at 81 in December of 2008. And obviously you can't see that in this chart, but I just throw that in as a little information for you. If we look at the chart right now, we can see that today when I captured this chart, the IEZ was trading at $13.07. Now, it did make an all-time low, and of course this isn't on your chart either, in December of 2020, down at 5, of all things. It was down at $5. But let's look here to the more recent lows. These lows here for the IEZ, it came in here at a double bottom. It made a double bottom here in October at about 6. You can see how it came down to these lows, moved down, started moving down in August, came down to about $6, then jumped up, succumbed to more selling, and moved back down to just about that number 6 again, and then took off from there and started moving up pretty dramatically. That was in November, and of course that's when we also had a change in the White House. So oil equipment and services started rising pretty dramatically here. IEZ moved in quite an uptrend here. It jumped over it gapped up here, jumped over its 20-day moving average, moved up dramatically, pulled back a little bit in December, then jumped up again over the 20-day moving average, fell back down again to the 50-day, and is now looking like it's starting up again. Now, some of you are going to say, hey, Toni, doesn't that look like a Head and Shoulders? It does, but it looks like a rising Head and Shoulders. And please know that Head and Shoulders can be continuation patterns. They are not always top reversal. You just have to know what to look for to stay out of trouble. So they can also be continuation patterns. So I'm looking here at the IEZ. If it can stay, and it was up today, if it can stay positive in the coming week, and know that if oil prices are going higher, the IEZ will go higher as well. That you can almost bet on that. So Again, today when I captured this chart, the IEZ was at $13.07, trading above its 20-day moving average, which is coming in at $12.45, and above its 50-day moving average, the green line coming in at $12.09. So if the IEZ can stay positive in the coming week, if it can stay above the 50-day moving average, the green line, that's $12.09 right now, if it can stay above that, I will add shares of the IEZ to my portfolio. I will probably add just a small position. I like to scale in on a lot of these trades, especially with the market coming to the end of earnings season. So I will probably add a small position to my portfolio. Let's just say as long as it can stay above $12. If it can move higher here and rise above resistance in the next few days or weeks above 1350, I will add to my position, and of course I will turn my stop into a trailing stop. So if oil continues to move higher, the IEZ will as well, and you may want to keep an eye on this IEZ in the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You will love my powerful strategies devoted to swing trading, trend trading, bottom fishing, and more. My programs are easy to understand, and they can help you increase your gains quickly and easily. To see all of my online training programs, you can go to the link on this screen, or you can simply click on the orange button below. And now let's go on to final thoughts. Our question for this week is, would I hire myself to be my own money manager? Would I hire myself to be my own money manager and hand over my accounts to me? And if I would, how am I currently measuring up? Am I treating my account in a responsible way, and am I protecting my capital at all times? Now, if you like, you can continue the question with more questions. Do I look at my statement at the end of the month and compare it to last month's statement? Do I make sure that when the market is in a downtrend, I stay defensive, and when it's in an uptrend, I take advantage of it? Now, be careful when you ask yourself these questions that you don't give yourself accusatory answers. That's just not necessary. Instead, use these questions as thought-provoking guidelines for improvement. So this is kind of fun. One way to start this process is to pretend you are taking your trading account to a professional money manager. Write down your goals for the account. We should have already done that anyway, but if you haven't, let's do that now. What do you want the money to do, and where are you going to use it when you retire it? If you want it for retirement and retirement is nearby, you'll want your account treated much more conservatively than if you want it for a dream vacation in 10 years from now. Next, decide the maximum drawdown allowable. This is very, very important. Is the maximum drawdown 5%? And this is of your total account value. Is it 5%, 10%, 20%? If it reaches those numbers, it will have to be taken to cash and re-strategized. Now, this is something a lot of money managers don't do, but that's because they're not paying attention. You need to pay attention. So you need to know, in order for you to stay comfortable and not have anything happen to your lifestyle or your future retirement, you need to establish a drawdown for your account, a drawdown percentage, and if it reaches those numbers, know that it would be best to take it to cash and re-strategize. That means stop the bleeding is what it means. So what is your maximum risk for each trade? Now, most advisors and myself, we advise that you never risk more than 2% of your current account value as risk on any trade. Now here's an example. Say you've got a $10,000 account. That's how much money. That's capital, by the way. That is not margin. This is total capital in your account today. Say it's $10,000. You want to make a trade. Please, 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 2% of $10,000 equals $200. So don't risk more than $200 on any trade. That's a standard way of doing things, and it's a good way of doing things. So whatever the trade is you're doing, adjust your risk and rewards so you don't risk more than $200 on any one trade. Now you can see by these questions what kinds of topics you would address to a money manager. Now ask them of yourself. Make sure you treat your money with all the respect you would demand of a money manager trading your account. That is one productive path to trading success. Try it. It's fun. I think you'll be surprised, and I think you'll like it. Finally, if you'd like to become a more successful trader, check out my trader training programs. To see all of my online training programs, simply go to the link on this screen, or again, click on the orange button below. Until next week, happy Valentine's Day. Keep green on your screen. I'm Toni Turner, and this is The Market Now.